Global Market Outlook, Monday edition. Good day and welcome to today's Global Market Outlook. Markets begin the new week with a relatively light but highly telling economic calendar. While the number of releases is limited, the data spans China, the Eurozone, and the United States. The key focus today is not volatility but confirmation. Whether global growth is stabilizing, slowing, or recovering. Let's begin in Asia. China. Manufacturing holds the line. The trading day opened with China's PMI for January at 50.3, matching expectations and slightly above the previous 50.1. This places Chinese manufacturing marginally above the 50 level, which separates expansion from contraction. From a market perspective, this sends a clear message. Chinese manufacturing is stable, but it is not accelerating. For global markets, this matters because China remains central to industrial demand and commodity consumption. Today's data suggests China is providing a floor under global growth, but not a catalyst for risk appetite. As a result, Asian markets are likely to remain steady rather than directional. China is stable, but fragile. Attention then shifts to Europe, where the sole major release is Eurozone retail sales year-on-year for December. This data point is critical because it speaks directly to consumer resilience amid elevated borrowing costs. If retail sales come in weak, it would reinforce the view that European consumers are pulling back, validating expectations that the European Central Bank will need to ease policy later this year. Such an outcome would likely place pressure on the euro and weigh on cyclical European equities. On the other hand, if retail sales show resilience, it would suggest demand is holding up better than feared. That would complicate the rate cut narrative, though markets would likely remain cautious given economic headwinds. Today's figure is about directional confidence in the Eurozone recovery story, or the lack of one. The most important release arrives during the U.S. session, with the ISM manufacturing PMI for January. Consensus expectations stand at 48.3. This data provides real-time insight into production activity, new orders, and employment conditions. If the index weakens further, it would confirm that manufacturing remains a drag on U.S. economic growth, reinforcing expectations that the Federal Reserve will eventually pivot toward policy easing. In that scenario, the dollar could soften, while defensive instruments such as gold may find support. However, any upside surprise in new orders or employment would challenge current market assumptions. It would suggest a more resilient economy, potentially delaying the timing of rate cuts. Such a result would likely strengthen the dollar and prompt a reassessment across equities and bond markets. This makes today's ISM release the primary volatility trigger on the calendar. Today's data flow paints a picture of a global economy that is not collapsing, but not accelerating either. For investors, today is about listening closely to what the data confirms, not what it promises. That concludes today's market outlook. Stay focused, stay risk-aware, and we'll continue to monitor these global signals.